Well, we get asked here at ausbiz all the time about AI and how investors can gain access to the thematic on the ASX. So here's an idea from Gregg Taylor at Salter Brothers, and I'll give it away by welcoming Tony Abrahams, co-founder and CEO of AI Media, to this event. Tony, welcome. Great of you to join us today. Let's just start with you giving us the 60-second elevator pitch. What does AI Media do?
Well, first, apologies for not being able to be there in person. I'm currently in the United States. I've been in New York for the last few weeks and I'm in DC at the moment. And I think the first thing to say is that I co-founded AI Media in Australia 21 years ago. And for the first 18 years, all of the artificial intelligence, all of the AI still required a human in the loop to deliver live, accurate transcription, captioning, and translation. As of November last year, we reached a milestone where the AI, unsupported by humans in the loop, delivered a better quality at a fraction of the price. And what we've seen is a massive takeoff in the application of this product, which we call Lexi. And the key to it is an acquisition that we did in 2021 of a company called EEG in New York that produces the encoding equipment that effectively sits in line with all of our customers' broadcasting equipment so that we are able to take all of the information natively through the fire hose of audio, video, and data and serve that up to any of the best and latest AI engines that we put up in the cloud and update it daily, so that people are, all our customers are future-proofed in terms of a purchase today of a piece of hardware that ultimately serves the best possible inputs into any AI engine into the future. Those AI engines are updated on the fly in the cloud, but the encoding equipment is secure and in the presence of our customers. And in this way, we've successfully increased the revenue of our core US business from 12 to 32 million in the last 3 years, essentially by adding on extra services in terms of AI-driven captioning services. And I'll pause there. I think my 60 seconds is up.
Well, I'm really glad that you mentioned that EEG in the US, which you bought in 2021, because it has been truly transformational for the business. But just to be clear, so is all the sort of legacy human intervention, is that all over, or are you still phasing that out?
We're in the process of what I'd say sunsetting the major opportunity there. Traditionally, as I said, up until 3 years ago, 100% of what we sold still had that legacy human in the loop. As of 30th of June, that was 50%, and we've said that that will be 20% of the total by December of 2025. What we also said was that we are now not looking to sign any new deals where we do that legacy workflow. And what we will be looking to do is partner with major, very high quality and trusted broadcast, government, and enterprise partners around the world. And the first of these that we announced was an ITV partnership just last month, whereby we are providing now the technology services to ITV, who are then on-selling any element of the human-in-the-loop services that might be required.
Well, Gregg, so you can tell me what part of this business makes it your big idea, but I would be so bold as to say it's this EEG acquisition. I mean, is this sort of a classic, acquisition that's been totally transformational for the business?
Yeah, I think it's a little bit of that, and full credit to Tony and the team, and hello Tony, good to see you. At the time, the market was a little bit sceptical about the acquisition and what he was doing, because as I said, that's encoding equipment and sort of traditionally a more hardware-based business, but it really did give them that key competitive advantage and really provide the pipes for this big AI trend that was coming. So it was very visionary, and but it was interesting at the time. It took the market a couple of years to define it as transformational. So that was interesting. But why we really like AI Media is, and I've been fortunate enough to be chasing big ideas in small caps for over 25 years, and I think all of us sort of chase that, the reference of the 10 bag or something that you can sincerely see a path to a 10x return in its share price over a period of time. And then if I look back over the last 10 years of some companies that have enjoyed that success, they've had a few really common traits. And what excites me about AI Media is they've got all of those traits. And if I just touch on a couple of those and sort of link that back to AI Media, but a couple I'll reference, like Technology One was one of the early supporters, one of the actual first institutions on their register, a long time ago. The next one was a business called Altium, again, first institutional investor and public supporter of that business, again, remarkable success. And now with AI Media. And if you look at all of those, there's a couple of common traits. And firstly, they had a big global thematic behind them, and everyone was looking for a way to play it, and took them a while to find the right player. And so for Technology One, it was cloud computing, and again, Technology One was punished because it was making that transition from license to SaaS sales, and ultimately got that right. Then the next one was in relation to Altium, which was all about connected devices and connected world, and again, that they were selling the picks and shovels to all the semiconductor makers and all those electronic devices that played a key role in this connected world. That big global thematic played out, and they were a big beneficiary. And as you touched on in the opening there, this AI trend, and everyone was really struggling to find a pure play in the ASX, and especially in the small cap market. And again, for the first couple of years, people took the view, and the market took the view, that AI was going to damage or really limit the growth of AI Media. Now they've really flicked that switch, and it's a major beneficiary. So big global thematics. AI Media is definitely riding the tailwind of that, and really well placed there. A couple of other characteristics of these past successes that excite you is, again, genuine global opportunity, and a really high quality sort of founder-led management team. And again, Tony's a great example of that. And you always look for a bit of conviction from the management team, and you would have seen publicly available that Tony has been a continual investor in his own business, but invested several $1 million into the business only earlier this year off the back of his conviction. So really strong signal. And then the last trait, and I've probably played a role in each of these three companies, is the business getting to a point of evolution and tipping point where they truly believe and have a line of sight to the next 5 years and what that looks like. I think Technology One was the first company on the ASX that gave this 5-year aspirational forecast. And guess what? It hit it, and guess what? It increased more than 10x over that period. Altium was the next one. And again, they put out this 5-year forecast, only at the point where they had the conviction and vision that they're really to put their reputations on the line to put that in a public domain. And more recently, Tony and the AI Media team have done the same. They talk about this aspiration over the next 5 years and this confidence in achieving this 150 million of revenue and 60 million of EBITDA. And what we've done, and recently presented on this in our SB2 fund, is provided some analysis that if they hit those numbers, and we've got all confidence, we've done a lot of work to independently validate them, but there's still some execution risk without question. But if they were to hit those numbers, the AI Media would be trading on a 1.7 times earnings multiple. Its peers at the moment trade on anywhere between 15 to 20 times earnings multiple. So there's your 10 bagger, right? So if it hits those numbers, it's probably trading at about a 90% discount to where it should be, or there's that 10x return opportunity. So pretty rare to find, but when you find them, you've got to back your conviction, and we have that in AI Media.
So interesting. There's so much in there. Tony, just on that 5-year plan then, give us any insight. Tell us how you're going to achieve these firm goals.
Well, one thing first to say is that Gregg and a few other people have said that it's a very aspirational target, right? And I get it, right? Like it's a big increase in saying that we're going to go from 4 million in EBITDA in FY24 to 60 million in EBITDA in FY29. But when you consider that in FY20, we were at minus 9 billion in EBITDA, and the additional increase in revenue between FY20 to FY24 was 17 million, and we added 13 million in EBITDA after adding 17 million in revenue. So the main target is the 60 million in EBITDA, and the way to get there is simply to continue what we've been doing over the period since we acquired EEG, which is essentially to continue to pull the human out of the loop in AI-driven workflows where we can deliver a better quality than the product that costs 10 times as much with the human. Now, the very first opportunity to do this, and it's really important that everyone understands this, the first opportunity to do this was in a very, very small subsector of the AI language market, which was live, because you can do live or recorded, right? So this is just live, broadcast, and remember we do broadcast and government and enterprise, but this is just live and broadcast, and the US and English. And in 3 years, we tripled that business unit to 32 million Aussie at an 80% gross margin. How did we do that? We did that by essentially presenting a solution to customers, which include, organizations like traditional broadcasters like Disney, NBC Universal, Warner Brothers Discovery, as well as broadcasters like the NBA and the NFL, and apps that are effectively now seeking to engage viewers in a very competitive landscape where there are multiple content opportunities. When I started AI Media 21 years ago, the bulk of people who watch television with captions were over 60 years old. Today, the number one demographic that watch with captions is 18 to 24-year-olds. 84% of 18 to 24-year-olds always watch with captions. What AI Media does is it automates the delivery of those captions by orchestrating the media asset management systems of our customers second by second. Now, this piece of technology we developed over the last 20 years when we still needed a human in the loop. What we have done in the last 12 months is simply cut the human out of that workflow and instead added the AI tools that everyone understands have gotten better and better with the improvement of ChatGPT.
So
And
it's really
that
interesting.
underlying technology, it's that underlying technology together with our ability to serve up the best possible inputs at the lowest possible bandwidth so that you can orchestrate and coordinate second by second and frame by frame the inputs into the AI engines.
It is fascinating. My children watch Netflix with the subtitles on, and it is amazing the accuracy now that can be achieved. So Gregg, one question for you though is oftentimes with technology companies we talk about a moat, we talk about sticky customers, we talk about recurring revenue. What does AI Media have going for it in that regard?
Yeah, probably all of the above. And when you talk about the EEG acquisition and there being transformational, it really secured that moat. And again, being in that ecosystem with the encoders from the generation of this content really places them at a competitive advantage. And again, the way the platform's been developed and to be able to serve into all different voice translation or voice to text products and channels is also a huge advantage. So our observation of the market is no one else has that position globally, and so that's the moat. And as Tony touched on, this isn't sort of people are thinking about this now, but Tony's been thinking about this for 20 years, and now the market's come to him, and so that IP depth and history and progress that is so far ahead of what we can observe any of the competitors is why they're winning so much market share with global organisations, right? Some of those logos that Tony was rattling off are global leading broadcast, and as Tony touched on, a lot of non-broadcast partners as well, traditional broadcast partners. So exploding market, they're at the right time at the right place.
And sticky once you get them?
Absolutely.
Yeah.
It won't, again, it all comes down to quality, accuracy, speed and price. And again, AI media are right at the forefront in each of those battles. So.
Greg, I'd add security. Greg, I'd add security to that, right? Like security is absolutely critical, right? And the fact that our encoders sit behind our customers' firewalls so that no one at AI Media can even see any of the information that's being sent to the AI engines is a critical component, not just for customers, like the Disneys and the ESPNs and the NBAs, but also for the US government. And it's this ability to deliver a solution reliably by serving up the inputs and coordinating them second by second while retaining confidentiality of that information. That's the final piece in the puzzle.
And I will note, Tony, that you're in Washington right now. So US now, where do you go from there as far as geographies? Is there an opportunity in Europe, in Asia, as part of that 5-year plan, world domination?
Absolutely. Look, first thing I think that's really important to say is that the US is critical. The US has been a leader in language service provision for 20 years and also in accessibility. The first Accessibility Act was actually passed by George H.W. Bush in 1989, and that has actually formed the basis of a lot of the disability and inclusion legislation around the world, including the European Accessibility and Equality Act, which is coming into force in 2025. And so we are expecting the success that we've seen in the US to be replicated in Europe, and also to be replicated in APAC. And when you look at our US business at the moment and you go, well, that technology business is doing 80% margins at 32 million in revenue, and we've achieved that in 3 years, what we're now saying is, well, we think that we can get 4 more of those successes, i.e. we can get another 4 times 30 million in effectively 8 other squares on this map. And when you think about it in terms of geographies, we're talking about Americas as one geography, EMEA as the other, and that's obviously a main focus this year in relation to that Equality Act, and APAC, right, being the third. And we think all 3 of those regions could be equal. But then we also think that we can gain as much in government and as much in education and enterprise as we have in broadcast. So having done it in sort of one of the 9 squares in 3 years, we're saying we think we can replicate that in at least 4 of the other 8 squares in the next 5 years. And yes, we can walk and chew gum at the same time.
Okay. Julie, Harry, thanks for your questions that have come in. We have addressed some of that when it comes to the moat. One question from Julie, ongoing levels of R&D. How much do you reinvest into the business to make sure that you're staying at the forefront? Because, of course, everybody's trying to get into the AI game, Tony.
Look, that's absolutely right. Look, we are probably in a bit of a purple patch at the moment, given that we've invested about $50 million in R&D over the 10 years leading up to the IPO. So as Greg said, there's actually a depth of work that we did anticipating this moment, not knowing exactly when it would come, but making sure we were ready for when it did come. The spend on R&D next year going forwards, if I look at everything in terms of product development, all the way through kind of support and customer engagement, is probably in the area of about $8 to $9 million. And that's on obviously a revenue base of around 70.
Yeah. All right. Final question to you, Greg. You've been on this for a while. I will give you credit. We've talked about AI media before on ausbiz.com.au.
Yep.
The share price is up significantly over the past year.
Yep.
But this truly, in your view, is just the beginning.
Yeah, absolutely. Look, to put into context, the share price has doubled over the last 12 months. And as I attempted to explain earlier, we think there's a 10x opportunity for this. So we really believe this has an opportunity to be a billion-dollar company, and it's only early in its journey. And if I look at the institutional ownership of this stock, it's still very limited. So it's and I can assure you that almost every week I get a phone call from a broker bidding me for my stocks. There's a lot of people out there still very interested in buying large positions at this part. So yes, a long way to go.
And you're not selling.
No, that's right.
All right. Gregg Taylor, Salter
I'm
Brothers,
not either.
thank you as always. All right, well, that's good to know, because we have said it before, founder-led companies, there's something secret and special in that sauce. Tony Abrahams, thanks for joining us. Really appreciate it.
Thank you very much.